Good Wednesday morning, guys. My name is Jerry Miller, and welcome to Real Talk with Keith Smith. Thank you kindly for joining us. The Wednesday edition of Real Talk with Keith Smith, presented by Ross Mortgage and our friend, Scott Morris, a trusted advisor. Scott Morris is crushing it with Ross Mortgage, by the way. And he's also crushing it as a dad and a husband. And yes, I will follow him around and say this on a daily basis because I love the guy. He's assembled today a panel of pretty talented proportions. Taylor Averitte's in the house, his third time. He's from Nest Realty. And for the first time, Jeremy Rowe, namesake founder of the Jeremy Rowe Agency. Judah Wickhauer, let's go to the studio camera. Let's welcome the fellas to the show. Scott, how are you, my friend?
I'm good, man. I'm good. Just doing the life thing. Got birthdays coming up for my twins in June. Work is going great. We're running around, trying to solve the people problems, get people into homes, help our realtor partners market and do the best they can to get as much exposure to their listings and activity for their buyer clients as possible.
One of the realtor partners right here, Taylor Averitte, in the house of Nest. How's the business of late? How about a market update from you, my friend?
Yeah, it's good. It's steady. It's kind of the same. Everybody I talk to, it's not going to be a record-setting year for anybody, but especially at Nest, where I think we have a nice group of professionals. Everybody's chugging right along. A lot of cash activity going on right now, unfortunately, and no complaints. I'd love to be busier, but it's the market we're in right now.
Let's get the first timer in the mix. And I would love an introduction, and not only on the business, but first personal. Jeremy Rowe, for those that don't know, an introduction to you in the personal life.
Yeah, thank you so much for having me on the show. I really appreciate it. I've gotten to work with both of these gentlemen here before, and I'm really glad I can come and help share some of the knowledge on the insurance side. I grew up just over the mountain in Augusta County and went to school at UVA, so I wanted to give a special shout out to all the UVA graduates this past weekend. It was a busy weekend in town. I'm very excited for them, and
I'm the only non-UVA graduate at the
fellow
table.
Wahoo at the table. Taylor as well. I second and concur what he said.
Yeah.
So
I don't want to discount. I'm actually the resident Tar Heel here.
I was going to. I know. You did say that.
I'm Real Talk's resident Tar Heel. So. Yeah.
So finish your thought here. So very much born and raised.
Yeah.
Augusta County, we'll get to this, red hot right now real estate wise because of price points. But talk to us what it was like to born and raised in this area.
Yeah, no, it was really good. I loved growing up over in Augusta County, and I grew up a big UVA fan. It was 30 minutes over the mountain, and even when I was looking to go to college, it was nice that I was 30 minutes from home, but still had a mountain in between where I grew up and where I was going to school. So, very convenient to get back and see my parents and my brothers and everything as I was going to school. But absolutely loved my time at UVA all 4 years. And, I'm very blessed that I still have the opportunity to be in and around Charlottesville and have begun my career. I've worked for Stanley Martin Homes in the past, and that was kind of where I got my introduction within real estate. Have been licensed in real estate and made the transition and opened up my own agency, the Jeremy Rowe Agency with Goosehead Insurance. And it's taken a lot of my previous work knowledge and it's put it into a new platform. So it's been good. I've got, I'm happily married. My wife is also a graduate of Washington and Lee for her undergrad and her PhD at UVA in psychology.
Wow.
And I've got a 5.5-year-old little boy, Barton Rowe, and my daughter will be 3 on June the 2nd. So also, right there, another June birthday. So
5-year-old and a 6-month-old. Yours are?
The girls will be 5 in June 26th, and Colton will be 3 August 3rd.
And Taylor, not to put you in the spot, no kids, right?
Apparently, I'm living a life of Peter Pan.
Okay, I'm sorry. The Tar Heels Peter Pan over here. We love Taylor, though, on the program. All right, so fellas, I'll get out of the way. You guys are the pros here. Taylor and Jared, how's business? How's the market? How's business going right now? Why don't we start with Jeremy? I mean, what's the temperature on the street?
Sure. So business has been going very well. A lot of what I do is correlated with the new home origination. When people are buying a home or they're getting a loan, a lot of what my business is focused on is helping those homeowners with their homeowners insurance. I write all personal lines, everything with the exception of health insurance. So life, auto, umbrella policies, but the big focus that I have is working within the real estate community on the homeowners insurance side. So my business has a tendency to ebb and flow a little bit with the market, but it's actually for the last 6 weeks has been pretty strong. I've seen a little bit more activity. Throughout the year, it's been a bit of a roller coaster. It hasn't been the exact. The spring market has had kind of peaks and valleys to it that we don't normally see in a regular market, and that's been felt on the insurance side as well. So business has been very good. I'm blessed to work with a lot of partners in Charlottesville, and I'm very glad when I can help them out.
Same question for you, Taylor.
Mm-hmm. Yeah, I concur. It feels a little stop-start. Monday there was 2 listings in Charlottesville.
In city limits.
Yeah, the last in weeks past, some days you'd have 15 or 20. So I'm sure graduation affected that somewhat, but as there's a lot of volatility in rates and things like that, it's just a week-by-week situation. My listings are down in the spring, year over year. I have...
What's the number? What's the count?
Right now?
Well, for you personally.
I've listed 1 house in the spring. I've done I've done a way more marketing this year. But people can't make lateral moves in the city anymore. They have to make a downgrade move. The rate environment, the price appreciation, these are taking people. I mean, my personal situation is I bought a house for $300,000 with a 2.5% interest rate 3.5, almost 4 years ago. My house.
Your first time on the show, I think you said on the program that you believe you bought the entry point in the city. I believe that's what you said on the show.
I think for a single-family home, yes.
Yeah, that's what you said.
That's
if memory
right.
serves.
That house is probably now $430 with a 7% interest rate.
But you got stacks of paper. But you're saying, what are you going to do with that stack?
Well, if I wanted to move, where do I go? I'm moving into a 1-bedroom condo for the same monthly payment. You know what I mean? So, if there is no vanity moving anymore. I just want a bigger house, or I want to move out to Crozet for kicks and giggles. I have to move now. I might be getting divorced. I might be having children, and I don't fit in this house anymore. There's no, and then it's a downgrade, or you're moving farther out of town. So, second part of the year, I've got quite a few listings lined up for second part of the year. I think that second part of the year is going to be better than first part of the year, the same way it was in the COVID situation, where there was kind of a deferred market. But, these things are week by week and touch and go. So we'll see.
Scott Morris.
I agree with that. And I think there's a ton of people, professional forecasters, who've actually branded fourth quarter as going to be the biggest quarter of the year. And then I think that there's some, additional factors that come into play. I think that what we're continuing to go through and see, like right now, we were just at almost 6% with an average conventional 30-year fixed, and now we're almost, I think today we broke through an average of 7. I think part of that is due to what we're seeing with the Fed and this debt ceiling argument, and people, not just people, I mean other countries, large institutions not being comfortable owning U.S. bonds until they say okay, everybody, we're going to pay our bills, and then they'll be comfortable buying back into the debt. And then at that point, the moment that happens, you'll see 5 to 8 basis point move in the 30-year, and probably a 0.5% move will dip back down to 6.5 or better on the 30-year fixed. But I think that's just the beginning of the story. We've talked about it a little bit off camera, and I kind of dip a toe into it here and there every week when we're here. I think that there is a bigger event coming, that it'll be, and it may not be one singular thing, it may be a lot of things that end up happening that everybody likes to think that things move in this linear fashion, but they don't, especially in the bond market, and especially in rates. Look how quickly everything moved down when the government put their foot on the pedal during COVID. We moved within 4 months from almost 5% rates to 3.5%. So it's a 1.5% move. In the course of the last 30 days, we've had a full 1% swing. things will move faster and they will be more dramatic, and they'll be driven by the default of zombie companies. As soon as we begin to increase a jobless rate, we're going to see individual defaults or properties pushed to market, or people who get in trouble and then face a foreclosure process, even though they have a bit of equity in the home. There's trouble coming, and there's just no one knows what that is, and that's one of the things that is probably the biggest concern, but will also be the biggest boon to us moving back into a more advantageous rate market for purchasing homes.
I want to get Taylor's take on what he said. He's alluding indirectly to Black Swan, as Judah joked. I don't know if we joke about this, Gray Swan, because we kind of see it coming.
Yeah.
Your thoughts on it, on that?
Well, if you listen to Peter Schiff, the world's been ending for about 10 years now. I think he's right. I mean, he's the finance guy, and he's looking at the markets more than me. There's a lot of people who are holding out of fear right now.
Holding their homes?
Holding their homes out of fear. They don't want to buy something at an exorbitant price with an exorbitant rate and then get upside down in it. We're in a bit of an insulated market here. I know that I have clients from other states that are seeing a little bit of relaxation on the prices. Clients in California who are, were buying something for their son here and worried that the values were going to go down because that's what they're seeing in California. Now that's a whole different discussion of what's going on.
Well, you can literally, for the first time in history, you can draw a line down the center of the country. It's actually more kind of like a slant from Detroit to Houston, and everything on the left coast is you're seeing a depreciation value, and everything on the right side is continuing to appreciate. And a lot of it has to do with some of the speculation purchases that happened in the Southwest. Some of it has to do with there's been some migration out of the states. There was the other thing is when you get into California, when you get into $1 million average price point, or Hawaii is a great example. I've got clients who are moving here from Hawaii now. I have friends who live in Hawaii full time. They have, during the whole COVID thing, there was not a single house for sale. Like, you couldn't get one. And the prices spiked. It got even crazier. Now it is a sea. Pull up Zillow, look at Hawaii. It is a sea of $1 million listings. Like, come buy my $1 million house. And there's not that many people coming. And then on top of that, there's not that many people that are coming that are going to jump in at a 6.5% jumbo loan and go, yeah, I'm good with that. It's just not, the market's not there. So they're seeing a decline that we're not seeing based on both we're at a better price point. We're in a better market as far as people want to be here. Not that people don't want to be in Hawaii, but people can't afford to be there in the same capacity that they can afford to be here. So it faces a human versus rooftop problem that we don't have.
John Blair watching on LinkedIn in Stanton, Kevin Yancey watching in Waynesboro, Grayson in North Downtown, folks watching in Raleigh, North Carolina, Naples, Florida, and outside Philadelphia as we speak. Anywhere you want to go on this topic, Jeremy. I will adapt to you here.
Yeah, so as you were talking about, both, the housing market and the interest rates, and this gray swan, not necessarily a black swan, but if anyone's gone through the car buying process
It's called
right
the Canadian goose.
the Canadian goose.
We always get back to birds here, Scott.
If anyone's gone through the car buying process recently, you're seeing the interest rates on cars and the appreciation of vehicles. It's another factor that's playing into all this as well. I mean, car payments right now, it's not uncommon to have $450, $500 car payments with buying new vehicles and the lack of inventory even on the car side. And all of these things are going to add up. I mean, it's the housing and the interest rates, it's the car market, and in the insurance world too. One of the big things that I wanted to share today is 2022 was a very interesting year across the industry for all carriers as far as underwriting losses. I wanted to share an email that we got. Personal auto, this is just car insurance, so we're not talking about home, but personal auto physical damage had its worst result in over 25 years in 2022, with a direct loss ratio of more than 20 percentage points above the average of the 25 preceding years, and 12% above the second highest, which was 2021. So in 2022 and 2021, we saw higher loss ratios across the industry.
What's that
in
mean?
home and auto.
What's that mean?
So it is the combination of accidents and what insurance companies were paying out for things that happen.
Okay.
So I'm an independent broker. I work with independent, different insurance companies. But State Farm, who's one of the largest, if not the largest insurance carrier in the United States, in 2022, they reported $13.2 billion in underwriting losses. Half of those were catastrophic losses, meaning it either maxed out the coverage for the property or it affected multiple homes. So we're seeing natural disasters that are taking place. We are, whether it's Californian fires or the hurricanes, or we're also seeing the cost of building materials increase as well across, the industry. So, those are other indications that, those are, homeowners insurance, auto insurance is getting more expensive. If you haven't gotten your renewals this year, those are going up as well. So you've got car loans going up, you've got mortgage rates going up.
Credit card debt at an all-time high in American history. You got cars more expensive than ever.
Mm-hmm.
You got houses more expensive than ever.
Throw student
you got
loan debt in
groceries
there.
more expensive than ever. You got the loans that people took during COVID coming due now, and debt service payments coming due on those loans. You got labor you can't find to work the small businesses. And because you can't find the labor, the little labor that's left is demanding high wage because they have a little bit of leverage.
Right.
It's what you were saying. I mean,
Death by
it's
1,000 cuts.
there it is. I mean, so how do you stop it? And we're not trying to be doom and gloom because we're all entrepreneurs. So as entrepreneurs by nature, we have to be optimistic because 80% of small businesses fail in their first 3 years. Why are we so doomy and gloomy this morning then? Who wants to take that?
Doomy and gloomy is, I think it's just, if you've got to get a good read on the environment to make a good decision going forward, which is also, I think, from a bigger picture, I think that there's a lot of investment in AI right now that people, it's that go back to this fear of, 5 years ago, everyone was worried that fintech's going to take out so many jobs. Well, it turns out humans are dumb and annoying. And as long as they continue to be that way, they have to have other humans to come in and fix their problems because they don't want to deal with AI. It's great from a base level communication standpoint, and there's certain things that it's going to fit a facet for, but I think it's oversold in the long run. AI has been around in different capacities for 10 years in a very strong way. But I think that when I see people like looking for the next gold mine stock, I think it's Microsoft and Apple. They already own it. And if they don't own it, they're going to own it. Mm-hmm. And
don't trade Apple. Don't trade Microsoft. Buy it and hold it.
Yeah.
Yeah, good advice right there.
And what you were talking about, I don't think it's necessarily doom and gloom, but as you were saying, be prepared. Like, these are just things to look at and be aware of. And there are smart decisions that you can make, individually. I mean, this is a pretty big ship. It's very hard to turn, this size ship, and the government's working on it right now with, increasing some of the rates, trying to, slow down inflation, which we were talking about earlier. But I think individually, you can do some things personally to kind of set yourself up to safeguard, a few of your things. Like, if you're in a home, right now, more people, are looking to stay. They've got their interest rates set up, evaluating where they are or what type of vehicle they are, not burdening themselves with debt as much. I know it's a completely different radio show altogether, but Dave Ramsey has been talking about this for the better part of 20 years about protecting yourself, not carrying as much debt. And so if you're setting yourself up that way and you're looking at all these factors and playing it out, then it's not doom and gloom, it's just preparing.
Comments coming in, guys. Carly Wagner watching the program. I'll throw this to Taylor from Carly Wagner. With the previous low rates but skyrocketing rents, more average Joe folks can hold on to their previous home even when they have to move. I know several folks that are keeping their starter home as a positive cash flow rental and long-term investment. because the rents are skyrocketing. This puts an even greater squeeze on inventory.
That's
It's a
right.
great comment. Your thoughts on that?
Comment. Actually, I was having this discussion with Keith Davis and Jonathan Kaufman the other day about myself. And we were just, around the water cooler and talking about.
He's talking owners and brokers of nests right there.
That's right. And they were asking me, especially with my Peter Pan lifestyle, who knows when the end is in sight here, but when
Were they joking with you?
If
Is that what they were doing?
if I ever moved, what would I do with my house? And I said, I thought I probably would just keep it.
Yeah.
I mean, I could
Wouldn't
cash. Yeah, we could cash flow it like way better than
You got a 275 on that. And would you buy it for 3?
3.
So 275 on 3, back of the napkin, don't ask Scott for help. I'm going to say 275 on 3. What do you like, 15, 16 a month?
Well, they raised my taxes $100 a month in January, so
Okay.
it's gone up a bit more than that.
Okay,
but,
all right.
But yeah,
And what do you got, a 3-bedroom?
well, technically a 4, but I would never put anybody in the basement. It's a dungeon down there.
So I'd say that's $1,750 to $2,000 a month all day, every day.
Maybe a little bit more.
Okay.
I think it's a little more.
So you're sitting on $500-600 a month from day one.
Yeah, cash
So why
flow.
would you sell?
I wouldn't.
Yeah.
I wouldn't. It'd be stupid to.
That's Carly's
unless the maintenance just got so deferred that it was going to be a nightmare one day. Or, and one thing to consider is if you're in a market segment where the demand is so high that people are going to waive inspections, and if you're going to hold on to it and wait until that changes,
That's a different environment.
and then you get caught making a $10,000 repair because it's a buyer's market, whereas now everybody's going to just take it as it is. That's
you go.
worth consideration. You have to do your break evens on that, depending on what your monthly cash flow is and how long you're going to hold it. But I agree with her completely, and even in my own calculus, I wouldn't sell the house.
Now, I think that sounds great for some responsible people, and I don't mean to say that that other folks may not be responsible, but they may have had things that happened in life that forced them to take on other debt. And in order to clear that debt and and qualify for the next purchase, they're going to have to sell the house, take the equity. It may not be the best decision, but it'll be the best decision for them.
We're straw manning a situation here where somebody is extremely financially healthy, but there are definitely cases where people have to roll over into the next house.
We just talked about the lack of savings and the increased credit card debt, and we as Americans typically that's like our MO. I mean,
we're overlooking probably the biggest problem going on right now, and that is the fact that is it July 1st, student loan payments restart. Probably at an average of 7.5% capitalizing interest on
6 to 10
extremely overinflated college prices for what is. And I went to Carolina and I went to UVA, so do not misconstrue me as being anti-education. But a lot of the things we're talking about right now.
Were you psychology?
No.
What was your degree?
At UVA, I had a master's in commerce.
Okay,
Yeah.
gotcha.
But a lot of the things that we talked about with financial literacy, this is something that we need to be talking to 17 and 18-year-olds making
100%.
college decisions
Yeah.
about, not the 35-year-olds who are already sinking deep. There's a discussion to have there, but
And this is also something where like probably the four of us can probably piecemeal together 8 to 10 books, maybe not even that many.
Yeah.
That probably cost like $20 each, and say read this, and then you can get everything you need that 4 years at UVA taught me. I'm not trying to throw shade at UVA. I love UVA.
Yeah.
But that's pretty much. I don't think I used a single thing I learned at UVA in the 15 years of running this business outside of the social skills I developed at 4 years of UVA being away from my parents.
you can
know
take
what I'm saying? Does that make sense?
You can take a Yale Chinese government class on YouTube with a industry leader, or you can go take Stephen Kotkin's Russian government class on YouTube, who's a Princeton professor, for free. And that's not a discount. I mean, college is a valuable thing, and I went there and I love it. But if you're 18 years old, PVCC is one of the best community
No doubt.
colleges around. Why not take 2 years at PVC? And my dad tried to tell me this too. He was blue in the face, and I said, "I'm going to Carolina. You're not." And it's Fayetteville, North Carolina. I wouldn't.
Carolina blue in the face.
Thank you,
Jeremy's
Jeremy.
got jokes.
But you know, the difference in cost when you're out, you don't understand until that first payment comes back.
Seriously.
And
So are you speaking
wanna-
from personal experience here?
of course I am.
Okay,
But it's,
all
you know,
right.
you want to talk about hinging people's capacity to own property. Throw $1,000 a month. That's not my situation, but it's
Okay.
like throw $1,000 a month student loan
service.
payment.
Yeah.
I mean, if it cost you $100,000 at 7%
that goes
10-year
back to
repayment to go to
my-
UVA, it's
And,
That
and
goes
100
back
is
to-
probably light.
probably light.
Yeah.
Well, look at this. So the greatest example of that is not for your situation, but for someone who's become a social worker in the state of Virginia, and some teachers, or some lawyers. So one of the things when I have a realtor introduce me and they're excited about their client, they go, they're lawyers. And I go, like, are they criminal defense attorneys that accept money? Or are they district attorneys who just went $220,000 in student loan debt and now make $80,000 a year?
In-house counsel for a nonprofit.
Yeah.
Something like that.
Or are they, is this a counselor who has to get a master's degree and then basically work for free for 2.5 years on top of the $180,000 to $200,000 in student loan debt they have to be a therapist, and they can't then go out and then earn off of that money? I mean, there are tons of degrees that we place on workmanship that you're never going to recover that money from, just period. I mean, there was a couple years ago, there was a Wall Street Journal article about some dentist who had accrued like $500,000 in student loan debt.
I think it's $2.5 million now.
Okay.
In Colorado.
The whole thing was they're like, he's just like, I'm not going to pay it back. Like, these are a dentist, typically they're earners.
Yeah, they make some money. Yeah,
$200K-ish per year people who just said, look, we're just never going to pay this money back.
I think they're paying an income-driven repayment, monthly minimum, which means his interest is capitalizing every year, and he begins to accrue interest on the interest, which is what these student loans are.
I'm going to die and not pay it.
He said, I'll die and my kids will get nothing, but I can't actually pay this back now.
That's crazy. That's crazy. Insane. Carly Wagner commenting, Jeremy, you jump in anytime you want. She says if needed, you could also take a HELOC out on that first home for a larger down payment on the next home. I'm curious if Scott's seeing that. Are you seeing people who bought, say, 2019, 2020, 2.75, 3% rate, stacks of equity, utilizing that equity for a down payment on another home and keeping the first one a rental?
They can if they qualify for all the debt, but I've seen people who are seriously flinching at the HELOC process because you're 10% interest right now on a lot of those products.
10% on the HELOC?
Yeah.
Damn.
Which is also variable, which is typically amortizes over 20 years with the balloon at the end, and then you've got the option to refi.
And what kind of term are you talking on that?
20 years. Typically.
20-year schedule, 20-year term too?
Yeah.
And it changes, adjusts?
Sometimes it's 10. It depends. There's a lot. There's so many different options.
Interest only for the first 10 years.
Yeah.
And
Some of them are interest. Again, so many options. Everybody's give you a different little piece depending on where you go. I really like Tower Federal Credit Union has some good products. UVA Credit Union's got some as well. But typically, credit unions are going to carry your best HELOC options. But again, it's how much money do you need? What are your other options? What's right for me might not be right for you.
Kelsey Hall asked this question. She says, this for the panel, it might be for Taylor. How many of the folks locally have become small-time landlords? And by small-time landlords, I mean 1 or 2 units and creating an inventory pinch because of that. I mean, that's hard to say.
It's really hard to say. I think that some people in my neighborhood have, but that's just anecdotal.
Is that Greenbrier?
I guess they're trying to annex me, but I don't live in Greenbrier.
Okay.
I live on just a small cul-de-sac to the side.
Mm-hmm. Okay.
But yeah.
And I guess I can jump in with that.
Sure.
So when I think about the amount of policies that are homeowners versus a dwelling policy where someone's getting a secondary rental, secondary homes are probably making up 5% or less.
You probably see it more than most of us because they're retaining it and then moving on.
Exactly, yeah. And I don't see it as much as people locally that own a home and then they're buying a secondary home here in the area. I get a lot more people that are out of state, whether they have the number of people that buy homes for their kids that are in graduate school at UVA, whether it's residency or law school or something like that. They're buying a home and that's, it's their secondary home, and then, their son or daughter lives there and then they pick up a roommate. So it's offsetting some of that, but a lot from California, New York, the upper, northeast of the United States, buying these secondary homes, and they'll keep it, and then they'll either, keep the equity and then they'll sell it later, or, they'll just have another place that they can stay in Charlottesville.
A lot of those people are cash buyers too, which is, inflating.
And if they've sold a property out of market in an inflated area, coming here with cash gives them that ability.
Tiffany Jackson just put that in the feed. How many out-of-towners are coming in here? All you guys, how many are you seeing?
This year, I've had a lot of buyer activity. My listings have been limited, but I've been very busy with buyers, and a lot of them are out-of-towners with cash.
Well, we're blessed. The city of Charlottesville it's a beautiful area. The job market is strong around here. The university is always growing. The hospitals are growing.
It's almost like we've rung this bell before, but keep going.
Well, and then if you look at this is from 2021 probably, but the top 4 cities for retirees in the state of Virginia are Williamsburg, Charlottesville, Waynesboro, and Roanoke. Those are 4 of the top areas for people to retire to.
Waynesboro over Stanton?
Waynesboro over Stanton, yeah.
That surprises me.
Waynesboro. It's the cost, but you're still close. I mean, it's a 30-minute drive.
Yeah.
Shoot, if you go from Crozeta to North 29, it takes you 30 minutes.
Yeah.
You can get from Waynesboro to downtown Charlottesville in 30 minutes.
It's true. Yeah.
So you got to go over a mountain. It's a beautiful drive, and traffic is fun, but
Yeah.
I digress. But so we're seeing a lot of people from outside areas, Pennsylvania, New York, Boston, even some people from Florida that are settling here. I mean, we all know this. I mean, you're 2 hours from Washington D.C., Northern Virginia, 4 hours to the beach, and you're in the Blue Ridge Mountains. So it's a beautiful area. So a lot of people that are retiring. Scott probably doesn't see them because a lot of them are cash buyers, and they're getting equity out of their homes, and they don't have to fight through 6.5%, 7% interest rates when they're buying the home. The price of the homes is still up. But they're normally trading out from a higher area, and that helps contribute to the rising cost of the homes.
How about this question from Lynchburg? This question is from Spencer Sherling, who says, how long will these market conditions persist?
A long time.
So you see tight inventory, high rates, deep buyers.
No. So I think that we're going to see a shift in rates. I still believe that we'll be in the low 5s by the end of the year. Maybe even we dip down once or twice, we can stick a 4 on it. But tight inventory will persist. There's what I like to call an enormous amount of dead inventory from people who qualified to buy at sub 3.5% based on their hourly earnings, or they were teachers, fire, police, that have a limited capacity to grow their income, and they cannot, as Taylor talked about, make a lateral or a step up. They can't make a vanity purchase. That option for them is gone, so that they are going to be in those homes for perpetuity, or they have the possibility, if they have been responsible, to where if they're maybe moving out of the area, they could retain it on its basic cash flow just because of the low interest rate and where they are. So they can grow some individual wealth in doing so. For your highest level of responsible buyer, individual, that's what they would do. If there's someone that then has had some sort of life experience that they have to move for, they may be forced to sell the property. And then the last tier would be if they've gone through some sort of individual struggle and they have to sell the property and become a renter. Those are the types of things that are going to put those properties on the market. But at the same time, they all take some time in order for them to happen, and most likely they're not going to happen to everyone at once.
What do you think about that?
I agree.
I think he's on point.
Wholeheartedly.
Yeah.
And also the falling rates doesn't help the buyer's journey.
No.
Not at all.
If anything, it's more competitive.
It's way more competitive.
But it increases the likelihood for people to go, okay.
Of putting my house on the market because I can justify the new rate.
Well, that's
maybe,
true. That's
maybe.
true. But at what rate of, does the demand segment grow at the same rate as the supply segment?
That's what I think. See, I think what he's basically saying, and I'm going to try to put it, Taylor's way smarter than me. I think he's basically saying when rates fall, a lot more buyers are going to jump in the pool. We may get more homes listed, but more buyers will jump in the pool, which will make it more competitive, despite the fact more homes are listed. That's what you're saying.
Yeah, including non-competitive buyers, which still makes buying a house more competitive.
Exactly. That's a beautiful, explain that.
Well, if I have 2 offers, let's say I listed my house at $300,000, I have 2 offers. I might get 305, 310 at the best. If I have 10 offers, somebody's going to come in and just be like, oh my goodness, there's 10 offers here. Let me just throw 350 at it, waive the appraisal. And suddenly the person who has a budget of 305 or 310, they still can't compete
Struggling.
just out of the fear purchase of somebody from out of town who sold their house in Florida for a 200% appreciation from when they bought it 10 years ago and just threw the cash at 350 up here at it.
There it is. That's a great example. Jeremy, anywhere you want to go on this?
Yeah, one of the things that we really need is more construction, which is, a double-edged sword because, some people don't necessarily like development, not in my backyard, but at the same time, like that's something that we need. And, we've seen over the course of the last 5-10 years, you were going from half-acre home sites with, 3,500 square foot homes with full basements, and things have gotten, they've utilized land more efficiently. We're seeing more of the condo complexes, more attached home products that are coming in simply to get inventory up. We've had to. The other side of that is the cost of constructions have gone up, really starting in around August, September of 2018 was really the first big lumber spike. And that was kind of the beginning of the rising costs and the construction rates that we saw. It was right there around August, September of 2018. And that's carried through. Even, through the pandemic, things have gotten even tighter. Anyone that's built independent has learned, things like it can take 6 to 8 weeks or more for windows to arrive. The production builders have felt that, but we're very blessed that we have a number of builders in Charlottesville, and they're working to bring that inventory. That's something that's going to be needed to kind of help alleviate this, is that new construction. And there was really...
well, we've got, unfortunately, enough NIMBYs, and we talk about this weekly with Keith. Local government and municipalities have become anti-growth in a lot of those sectors. So we're not going to be able to build our way out of it. However, with the small individual builders, what we probably are, and I'm talking smaller than the Ryans and even Stanley Martins and even smaller than Liberty. I'm talking about the individual Class A contractor who can build a house for $220,000 on a 1,500 square foot, 3-bedroom, 2-bath, where Jeremy's bought a $50,000 lot where you can be all in for under $300,000.
The folks you brought on the show.
DJ Moberly in Culpeper. They inspired home builders. They have the greatest amount of opportunity right now because they can essentially put you in a new home for less than what you can buy a resale for, or a very comparable price. And those are the builders who have, I think, the most amount of opportunity, and at least provide also the most amount of benefit to the individual who's got the capability to make that sort of thing happen.
Scott Morris, Ross Mortgage. Great take right there. Daniel Pettit watching the program. Real Estate 3's finest. He's been in the business for Dan, I would say 30, 40 years? He says he's watching at ACAC right now on the treadmill. He's got a question for you guys. Do you think the rental rates will continue to rise? I think he's got a rental at Lake Monticello. I think they'll continue to go up. We've got more people coming to this area, limited inventory to buy. People need a place to live. If people need a place to live, they got to rent. If they got to rent, the landlord's got the leverage, so they bump the price. Is that the equation?
I'm not a property manager, but the demand and supply are the same on the rental side. And if I own it, like let's say I rented my house out, and it's a 1-bedroom condo in town for $1,800. I'm just going to bump my price at $25 and be like, oh, you want a yard? You want a fenced-in yard? You want 3 bedrooms? You want a carport? Go rent at the apartment complex for $1,800, or you can come pay way more for here.
Angela giving you some props right now, Scott. She's watching right now. She just threw up the clap emoji and the heart emoji for dropping the business and giving her some props. Angela, we love...
welcome. You guys are great. I love everything you do. You create a great product, a good experience for your clients.
Yeah. You think the same, Jeremy?
Yeah, well...
with the rates, the rental?
Yeah, I do. I think it's going to go up. It feels like we've been, for probably more than 20 years, it's always felt like Charlottesville's been 95% saturated as far as the rental market. Like there's just never been enough rental
really
properties.
Competitive to get something.
It's been that way as long as I can remember, as long as I've been in town. Going back to students, you had to find your second-year housing by October of your first year. You had to figure out who you're going to live with, and you had to start looking then. because it took that long to find leases, get it all squared away.
And the
So,
interesting thing about
yeah.
that dynamic is by October, you're not really sure who you want to live with
Exactly.
second year because you've only had like a month and change with them. And you have not had enough time on rugby or on the corner with the fake IDs to really get to know if this is who you want for second year. And I'm just speaking from personal
That's true.
experience. That's just me personally.
And I was an RA my second year, so I
Okay.
was playing this
Which
dice
dorm?
roll. I was in Dabney my second year.
Dabney 101, my first year.
Nice. So I rolled the dice. I was like, I need to figure out if I don't get RA, am I going to be homeless for my second year? Because like you had to commit.
You would
or
have been
had to
far
get
new
it.
dorms
So-
if you hadn't gotten
Yeah,
RA.
exactly.
And
I
you would
think
have been
it would've been
walking far.
Hereford.
Yeah,
Yeah.
Hereford, that's right. That's totally what you would have done.
No, but there's not enough inventory out there, and so as long as everything else is going up, we are going to continue to see the rise in the
I saw a
the
rental
rent
listing
rates.
the other day where the owner had put in the comments on Zillow, please, 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 no more inquiries. I'm inundated.
Really?
Yeah,
Get out. Why didn't you just take the listing down?
I don't know.
That's bananas, man.
Yeah.
That just talks about the market. All right, more comments coming in here. There are multiple triple-digit acre sites for sale in Augusta County. If a forward-thinking builder started building 1,800 square foot, $225,000 homes in Augusta, he or she could not build them fast enough. Interestingly, we have an Augusta County boy on set, born and
Yeah.
raised. Anywhere you want to go in Augusta County. It seems like you got tremendous momentum and tailwinds in Augusta County right now.
Well, there certainly is the land, and of course, Augusta County has some of the best farmland in the state of Virginia. I mean, the state of Virginia has some of the best farmland in the United States.
It's not just
So-
meth and chickens.
No, it's not at all. No, I mean, Augusta County is a beautiful area, and the county does a really good job protecting a lot of the farmland that's over there, and so it is not easy for just a builder to come in, buy the land, and assume that they're going to be building. So
So
it
my
has to
other
get
question
zoned.
would be like when we talk about these big parcels of land. All right, there's to me Augusta County is a very large county.
It's massive.
And when we talk about where a builder could execute this, I mean you've got to be on that 8164 like
Quarter,
Correct.
100%.
or because if not, if like you're in Churchville, like
Too
I don't-
far.
Yeah, like it's
Yeah.
really nice out there on like on cow pasture, calf pasture, but you're not. And while you could build some amazing homes out there, unless there's not that. I don't think there's internet to support.
How's it any different, though, Scott, than Buckingham County? And people live there.
That's been my point about Buckingham. If you're on the other
$225,000
side, if you're right
homes.
on the other side of the bridge at Scottsville, that's one thing. But if you're back where the national forest is, like,
That's the sticks.
yeah.
Yeah, and there is, and I think some of the builders have to be looking for it as well. Like I know there's an agent in Augusta County, Jody Sipe, that she's got a parcel of land that's already kind of platted for 32 individual homes. I'd reached out to a couple of builders and said, hey, this land's ready to go. I didn't hear back from one. I heard, no, it's a little bit far for us to drive, but it's in Fishersville, Virginia. I mean, Fishersville, the land is within a mile of Augusta Health. That's right there. It is 5 minutes to the interstate.
Didn't you just get an Amazon? A warehouse in
Yeah,
Fishersville?
there's a new, that's another topic of conversation because the population in Augusta County also needs to grow because there's more jobs that want to come into the area. But, Augusta County needs not necessarily all the blue collar jobs, they need a mix of everything. But there is land and there is the opportunity for it to continue to grow. Fishersville has been an area of growth for the last 20, 25 years. There's a few spots just north, I guess, of Waynesboro, like Anna Maria Estates, that they have a number of parcels of land. More of your smaller production builders and local builders that buy those lots and build over there. NVR, Ryan Homes, they've been building over there. Atlantic Builders is building over in Augusta County. They have land in Stuarts Draft. You can buy acre home sites in Stuarts Draft. So there is land to be developed there, but at the same time, it's not the way that the county is set up because it has been agriculturally based for so long. If a farmer wants to retire, he can't just sell his land to a builder and they can just put up a neighborhood anywhere they want. There's different rules and regulations and zoning that has to go into that. So it's the focal points of growth in the county that are important over there.
That's a great take right there. He grew up in Augusta County, and he used to work for Stanley Martin, so he's got experience with a production builder. So he's speaking from really shoe leather and experience with that take there. This comes in the feed. There's 1,000 acres directly adjacent to 81 and 2 miles from Interstate 64 in Augusta County. And they say Augusta County has what no one else has, the dirt to develop and build upon. It's a great take. Here's a question specifically from Taylor for someone that's thinking about getting into the real estate business. It's a challenging time right now.
Yeah.
If you're thinking about getting into the real estate business. I'm not trying to be a dream crusher, and I'm not even in the business. Maybe I'll let Taylor give you that advice. She says this, is your footprint now expanding as a younger agent with limited sales in Charlottesville and Albemarle County, and how far are you willing to drive with your current business?
Good question.
Well, I actually feel like my footprint is shrinking, but I think that's extremely situational to me.
What's that mean?
When I first started, I was driving all over the place, and I still will. To be frank, like I have a deal in Richmond right now with a past client who went over there and wanted me to work with him. And
I've known Taylor to go to West Augusta. So Augusta
driven
County is so big
I've driven
that
to
there's two
Churchville
parts
before.
of it. There's Augusta County and then there's West Augusta.
So that's, what is that, 90 minutes one way?
That's like
Nah, it was
Monterey.
like 60. It was
60
it
minutes
was
on
an
one?
hour. Yeah, I
Okay.
generally will drive an hour, but I don't have the kids and the wife, and
Right.
am pretty money motivated. So it doesn't matter to me. I like to work. But after I moved to Nest, just the market share here, purchase price went up. I started to focus a bit more on the area, and it just kind of happens naturally being with the branding behind you. And as you get a little older, and I've been in the business about 6 years now, so as you're in there longer and you're more integrated into the community, your business does start to centralize and focus a bit.
So you're now in that move-up buyer.
Yeah.
You're in the move-up buyer customer.
I have a lot of double-sided deals right now from, I have one, these folks are in a really good financial situation, but they're buying another house in cash and selling the first one. It's a lot of second home stuff now. I will say, and I'll let Scott speak to this too, it's a grinded out time if you were really going to get in. I've heard of a lot of cutbacks in the mortgage. Even locally, there's been some layoffs, some thinning of the herd.
I've heard of the same. I mean, I mentioned this on our show, the I Love CVille show. This is not me speaking out of turn. This
Yeah.
was online. Nest closed its downtown office.
Well, they're moving.
Okay.
They built another office.
Okay.
Yeah.
So you want to offer a little insight into that, or you want to save that for the principals? I don't want to put you in a hot spot here. That could be a Keith Jonathan question.
I think this is, it might be a Keith Jonathan question, but I don't think it's, speaking out of turn to say that, I think they just preferred to build an office. And it's just completely random that it's occurring right now. I think they had a bit of construction delays with regard to it would have already happened.
Construction delays?
Yeah, right.
For those that are streaming in their car, there was some sarcasm there from Scotty Moe.
But in short, I don't want to discourage anybody from doing it. I love being a real estate agent. It's a job that really fits my personality
you're great at
and
it.
things like that. But if I didn't have a couple hundred past clients right now, it would be a real slog to dig some business up, to create some relationships. And I do not advocate doing it on the side.
Yeah. It's
At
not a side
all.
hustle.
It's
a
not
lifestyle.
a side hustle. It is a full-time job.
Yeah.
If you do not want to, if you do not want to work at 7 p.m. or on Saturday and Sunday afternoon, or be available within an hour of somebody calling you to see something that there's going to be 10 offers on in 2 hours, you don't need to do it. Frankly, if you completely invest yourself in it, you can make a really good living, and it's a great job. But you have to fully commit. If you do decide, hey, I'm doing this, I want to get into it right now during this rougher environment, find an experienced agent who wants to hand off leads and pay you a fee to work on them, and just do their dirty work for them. Meet people in town, maybe have them set up a structure to give you some sort of salary, or having them buying leads from you. When you get really established, you're going to hate how much money they're taking from you, but it's a great way to safely get integrated and meet people and build a client base and build a book of business. And then pivot from there when the market gets better. But stepping out as a 1099 today would be a really tough situation.
That's great advice. Hardest question I'm going to ask you today.
Yeah.
This is it right here. It's a follow-up to that one.
Okay.
How many of the 1,200 or so dues-paying agents in car are not going to renew their license?
I don't
I don't
know.
mean to put you on the spot.
I don't know. I'll give you a.
Because I would imagine that percentage is double digits. When you're talking about when you're talking year-over-year sales drop in volume of 25 to 30%.
For sure. Well, it's already normally distributed. It's like everything, right? You know, you can have 1 million restaurants or just take the NBA, for example. There's 20 all-stars in a league of 400 people. The real estate's the same way. There's 1,200 members of CAR.
90% of the business is done by 10% of the agents.
100%.
Tommy Brandon told me that.
Right. So there's going to be a lot of people probably not renewing their licenses. There's probably a bunch of people who got the licenses to sell their own house and save on the fees. But there will be a thinning of the herd. I can't tell you what percentage it'll be, but the 10% doing 90% of the business are not feeling, they may not be as profitable as they were in years past when there's just crazy amounts of transactions going on, but they're not feeling a pressure in the same way.
I've got
the
an
other
agent that I
90%
grew
are
up with,
feeling
and she
pressure.
doesn't care if she does as much business anymore. She's like, I just don't want to be as busy. And that's not that's not bravado.
She's not bragging.
It's not bravado.
Yeah.
It's 1,000% like, I own 11, 15 rental properties now, and I can, this is, if I do 40 instead of 70, my feelings aren't going to be hurt at the end of the day.
I think we have that similar friend, and we won't out her on the show here. Your thoughts on what we're talking about?
Yeah, no, just in general with getting, into the real estate market right now, I've known some new agents that have come on board, but I had someone maybe 6 months ago that had just posted on, online, thinking about getting my real estate license, and I quickly, jumped in and called them in and said, you just got to look at both sides of it, For some, it's a lifestyle and it's a lot of work. I think a lot of people have this mentality that it's a lot of fun to drive around and show homes, but what they don't see is the hours that you put it in on Saturday at 7 o'clock or Sunday at 9 o'clock. Right now, you might be looking at 30 homes before you get an offer accepted with some of your buyers.
And how big do you want your footprint to be?
Yeah.
Because that's another thing. If you're just getting in, you've got to be willing to be everywhere. And if you want to grow, you've got to be willing to be everywhere. Because if you're just like, I'm just going to work.
It's what you've done, dude, with your business. I mean, and he's humble, but I'm going to toot his own horn. He's crushing it. And what he's done is he's grinded. He's put his brand everywhere. You got a hell of a team. I mean, I've seen you assemble the team slowly, over what? Years?
Yeah.
Right?
Over years.
I mean, you're crushing. He's 2 in production in all of Ross, in the entire company. This guy right here.
That's awesome.
That's awesome.
Yeah.
But he answers the phone, and Keith talks about it all the time. Might be Sunday, it might be a holiday, but Scott's going to pick up. And that's what you got to do. And that's why he does business.
I've got an agent that I generally like to say that I work with people that I like. And me and this dude do not get along at all, but at the same time, he's out of market, so I can say this. I know he's not listening, but
he crushes it, right?
He crushes it,
Yeah.
But at the same time, he knows that if he calls, he's going to get an answer.
Yeah.
Every time, no matter what, whether it's one he wants to hear, whatever the situation it is, and there's a great working relationship.
The value of that
so many
cannot be
people don't
understated.
do that, though.
No.
That's
I know.
why they say 70% of it, or whatever the number is just showing up to the work.
Yeah.
Just showing up on time. Right. It's crazy. Comments coming in. We'll try to get to as many of these as possible, guys. This one for Scott. A little bit of a zig from one of the Kevins here. Do you still think we're going to be in the 4s by the end of the year?
I said on today's show, my reasons
said,
for it.
End of the year 4s.
I picked up
My
contextually.
reasons for it, we talked about pre-show and a little bit early on, are not good reasons. But yeah, do I think that we're going to get there? I do. There's some bad stuff that's going to happen to get us there, but I think that we're going to get there.
End of the year.
By the end of the year. And like I said, we may not maintain that, but I think we dip down into it no matter what. I think by the end of the year, at least at one point, you can be able to put a 4 on it.
What do you think about that, Taylor? He's talking Q4 30-year fixed in the 4s.
You know, Scott's a dreamer, and I wish I had his optimism. My life would be it'd be better if I did.
I think I said 4.99, but you can put a 4 on it.
The first time he said this on the show, is it Japrecia Clark? Is that who it was? He had Japrecia Clark here. She was sitting right there. He said that. She jumped up and was so excited. She's a realtor as well.
Yeah.
She was so happy
Also
to hear
a
that.
Nest.
Yeah,
Also
also
a
at
Nest.
Nest. She's
Yeah.
fantastic. Japrecia, I hope you come back to the show. All right, another comment coming in. This one for Jeremy. What was the
Sure.
most difficult aspect of launching your agency? Where do you begin, right?
Yeah, no, I mean, there was a lot into it. There was a lot of planning and thought that went into it. It is not an overnight step to open up your own agency. The most difficult and scary thing is, it was a new franchise. So day one when I started, I had $0, 0 policies. I didn't buy a book of business. It was me. So I had to bet 100% on myself.
That's awesome.
And out of all the Goosehead agencies in the state of Virginia last year, I've got one other guy that I work with, Isaiah, and I think we were finished 5th in the state. So,
Nice, dude. Let's give him some props.
It was really good. Oh, thank you.
Fun fact:
That's legit.
He has an extremely high customer service background because Jeremy and I knew each other from the car business before us ever getting into our.
Before Stanley Martin.
Yeah, before
Okay.
Stanley Martin, I was a long time ago the branch manager for Enterprise here in Charlottesville. Fun fact, and I am going to brag on myself, it was during a Honda recall, which was lovely. There's recalls going on all the time. But at one point, the Charlottesville branch on 29 was the largest Enterprise branch in the state of Virginia outside of an airport. So
This is
that
Ryle
was-
Hill?
This is the one on 29.
Okay.
Yeah, right there
Okay.
near
It was
Ryle
Honda,
Road.
and it was also during the ignition recall for Chevrolet. Both were going on at the same time.
And I think that branch was up to like 450, 480 cars, and they were all on the road for recalls, which was great. So Scott and I went all the way back there, and I was the guy that was coming down, picking up customers or asking for invoices and everything. So, but no, going back, the hardest thing was just going out completely on my own, and starting from zero and building the business from there. But it's been a lot of fun. I've been very blessed, and I've got a broker for over 70 different carriers. I don't work for any of them, which I really love. I'm kind of I don't have any quotas for any of them, so whenever I work with someone, it's just whatever company is going to give the best rate and best coverage. That's what we look to kind of arrange. So it's made my job easier having that as well.
I love it. You did a hell of a job today. I want to get some closing thoughts from you guys. I got one more question from a viewer and listener for Scott. He's talking PMI, removing PMI. He wants your take on it. If you guys get to a point of equity where you don't need the PMI, you're going to have to notify your lender to have that payment removed. Is that the right strategy?
So if it's your initial lender, like me, then I'm going to talk to you about the process and tell you what you may need to do. But the first thing you're going to need to do is contact your servicer. So most likely after you had your mortgage originated, it was transferred to a permanent servicer, whether it be a Mr. Cooper or PennyMac, or any one of those the names that may be familiar to people listening. At that point, if you feel that you've got an update from your lender saying your house has this much value now, or you believe, or if they're sending you stuff in the mail saying you can take cash out, that's a great time to go, well, if you think I can take cash out, then you're telling me I should be at 80%.
That's where the comment's coming in.
And if you're there, you need to contact the servicer. The first thing I would do, I would contact your realtor if you've got a good relationship and say, hey, can you take a look and give me a CMA on what you think my house is worth? Because if they tell you that it's a dramatically different number than what the servicer is telling you as far as in relation to the value of getting that cash, it may not be worth it for you to go spend $500 or $600 on an appraisal, because that's the first thing that's going to need to happen. You're going to need to contact the servicer, get them to order an appraisal, and that appraisal is going to tell them whether or not the value is. Now, it should be 80%. It should automatically come off if that's the case. But if you've only been inside of that mortgage for less than 24 months, they may have individual rules that it has to be at 75%. There could be, you need to contact them, one, find out what the rules are, contact your realtor, find out what they believe the value is, and then make a knowledge-based decision based on the rules and that supposed value and what their appraisal should come in at for your next step.
There you go. Turn that into a piece of content, a sizzle reel there. I would bet you there's a lot of people in this position that have purchased in the last 24 months or 18 months, and the market has appreciated so much, even with like a 5 or 10% down payment, that they've eclipsed the 20% marker, and they're still making the PMI payment, don't even realize it.
Oh,
I bet you there's a
absolutely.
boatload of people doing that.
Absolutely.
Don't you think?
Oh, 100%.
Because do you have to notify for it to come off, or do some loan providers do it on their own?
So if you're at like the 5 to 7 year mark, they may drop it. But if you're less than 5 years, you 1,000% are going to need to reach out to them and say, hey, let's get an appraisal ordered. But before you do that, contact your realtor, your professionals, your original mortgage originator. Have a conversation, get an idea of if it's something that's truly going to work before you go spend the money.
I like it. I like it. Scott Morris, guys, Taylor Averitte. Jeremy, you crushed it today. You got to bring Jeremy Rowe back to the show.
I think the plan is to bring Jeremy Rowe back to the show and Taylor. So this is I'm going to be gone next week.
Very nice.
Due to some family stuff that I've got going on, and I think these two are going to come running the show.
I love it. Next Wednesday, guys, you're going to see Taylor and Jeremy back in the house. Are you back the following Wednesday?
I'll be gone the following Wednesday, but Keith will be back then.
Keith's
and then I'll be back the week after that.
For those that are asking, I do see the comment on the feed. Keith Smith celebrating, is it anniversary today?
I think so, yeah.
Anniversary with Yonna. So he and Yonna are out of country celebrating their anniversary. He is back 2 Wednesdays from now for Real Talk. Judah Wickhauer, the director. My name is Jerry Miller. The I Love CVille show is up in about an hour and 10 minutes here on the I Love CVille network. Thank you kindly for joining us. Take care.
Thank you.
Well done, guys. Jerry, well done.
Thank you.
John hit the head.